Today, we're diving into a stack of sources about Reliance Industries Limited that's reliance on the NSE, looking specifically at a really comprehensive analysis from May 2025. Our mission here: to navigate this detailed report, really get our heads around this Indian economic behemoth, its different businesses, how it's been doing financially, the big strategic moves, and what the technical charts were saying about the stock back then. The goal is for you to walk away feeling properly informed.
Okay, let's get into this giant of the Indian economy.
Yeah, it's fascinating. The scale is just immense, and the sources really hammer home that it's India's largest conglomerate, Fortune 500. Started in textiles way back when, but now energy, petrochemicals, retail, telecom, media, and this huge, relatively new push into new energy.
And when you say scale, you mean it. The May 2025 analysis puts the market cap around 19 trillion rupees. Yeah, roughly 225 billion US dollars back then. India's biggest public company, easily. And, it's somewhere around 86th globally, depending on the measure. It's a major player.
Right. A serious global player.
And their philosophy, growth is life. And what is good for India is good for Reliance. The sources suggest these aren't just taglines. They seem to actually drive strategy, this idea of building national assets. It goes back to the founder, Mukesh Ambani.
So deeply embedded in India's growth story. To really understand it, though, you've got to look at the different parts, right? The analysis breaks down the key business segments as of May 2025.
Absolutely. That diversification is key.
Let's start with the foundation. Oil to chemicals, O2C. The traditional core business. Jamnagar complex.
That's the heart of it. Still the biggest O2C player in India. Huge scale, vertical integration. That's a massive advantage.
Okay, but looking at the FY25 numbers, revenue was huge. 6.27 lakh crore. But the EBITDA, that was a bit surprising.
Exactly. Record refinery throughput, but EBITDA was actually down year on year, about 55,000 crore for the year, and down 10% in Q4. So operations running full tilt, but profitability got squeezed by weaker chemical margins, fuel cracks, that kind of thing.
Right, which highlights what the sources flagged as a challenge.
Yeah.
That dependence on volatile global prices and margins. And of course, the long-term energy transition question hangs over it.
Precisely. It's the cash cow, but maybe facing some headwinds, which contrasts sharply with Reliance Retail.
Oh yeah, this thing is everywhere. The analysis calls it India's largest retailer, hands down. Grocery, electronics, fashion, pharma, even FMCG now, big time. Plus Gmart, quick commerce.
Unmatched scale in India's organized retail, and the only Indian name in the global top 100 retailers, according to the sources.
And the numbers back it up. Huge growth driver. Revenue hitting 3.31 lakh crore in FY25, EBITDA over 25,000 crore, both way up. And the store count, over 19,000 stores, 349 million customers. That's staggering.
Plus, that FMCG business doing nearly 11,500 crore in its second year.
Wow.
It shows the speed, right?
Absolutely. That speed, the supply chain, the synergies with geodata, it's a powerful mix.
But the analysis also points out the flip side, right? Intense competition, managing that huge, complex supply chain, keeping up with changing tastes.
Sure. It's not easy street. And that scale connects directly to the next pillar, geo platforms. The digital side.
The big disruptor. India's top telecom player, huge in broadband too, with geofiber and air fiber now.
Running market share, yeah.
Around 40% wireless subs in early 2025, nearly 488 million total subscribers by March. Just massive numbers.
And financially, consistently strong performance here.
Very strong. FY25 revenue, 1.28 lakh crore. EBITDA, over 64,000 crore, both up about 17%. And that EBITDA margin, around 50%. That's impressive. ARPU holding at 206.2.
Plus, the 5G rollout was super fast. 191 million 5G users by March 2025. And the analysis mentions something really interesting strategically, the Starlink partnership.
Ah, yes. The potential tie-up with SpaceX for satellite internet. Potential launch within about 12 months, the source suggested. But, pending regulatory approvals, that could be big for rural connectivity.
So, huge network, huge user base, deep pockets. Those are the advantages, challenges.
Well, the ongoing cost of finishing that 5G rollout is massive.
Yeah.
CapEx is high. Plus, maintaining pricing power, navigating regulations. It's complex.
Okay, let's touch on media and entertainment. Now, consolidated under JioStar, right?
Yeah, post that big merger with Star India. So you've got TV channels, JioCinema streaming, Hotstar assets, film production. It's a behemoth now.
One of India's largest media players, aiming for 1 billion screens, as the source put it.
That's the ambition. The financials for the part year post-merger showed decent revenue, around 505,500 crore, small positive EBITDA. The combined streaming platform, Jio Hotstar, Reports suggest maybe 280 million paying subs, driven heavily by sports rights, especially cricket.
So the advantage is content, distribution via geo, and sheer scale. But the challenges?
High cost for content, definitely. Intense competition from Netflix, Amazon, others, and just integrating those massive businesses smoothly.
Got it. And briefly, there's still the legacy oil and gas E&P business.
Right. Exploration and production. Focus on assets like KGD6. They're a significant private player in India's upstream.
And surprisingly, record EBITDA for them in FY25. 121,188 crore, up almost 5%. Driven by production, though Q4 dipped a bit on prices.
Yeah, their deep water expertise helps, but still subject to global price swings and the usual E&P risks.
Okay, that leaves the big future play. New energy and new materials. The net zero by 2035 goal.
This is the moonshot, really. The analysis portrays it as building an entire integrated ecosystem. Solar, green hydrogen, battery storage, advanced materials, setting up huge gigafactories in Jamnagar, buying companies like REC Solar, Faradium.
But right now, it's mainly investment phase, big capital outlay.
It's a major destination for their capex, which we'll get to. Not generating profits yet. The advantage is RIL's financial muscle and project execution track record. The challenge: massive upfront costs, fast-changing tech, scaling up manufacturing. It's a huge undertaking.
Okay, that covers the pieces. Let's look at the whole picture. The consolidated financials for FY25.
Overall, pretty robust. Gross revenue around $125 billion US. Consolidated EBITDA about $21.5 billion. Net profit around $9.5 billion. Solid numbers.
But what really jumps out from the analysis is where that EBITDA is coming from now.
Right. The consumer businesses, retail and geo, contributed over 55% of the consolidated EBITDA in Q4 FY25. That's a fundamental shift. Years ago, O2C would have dominated that. It really shows the diversification working.
But fueling all this growth, especially new energy, takes serious money. CapEx was huge in FY25.
Staggering, really.
Yeah.
$15.3 billion US in 1 year. That's funding 5G, retail expansion, and kicking off new energy construction.
Wow, $15.3 billion. How does that impact the balance sheet?
Well, net debt was noted as broadly steady, around 1.17 lakh crore, which sounds like a lot.
But the key thing the analysis highlights is their cash generation. They generated nearly 40,000 crore from operations in Q4 alone. That basically covered the CapEx for that quarter internally. That ability to self-fund so much of this huge expansion is a major strength.
Okay. And key ratios. The PE was around 27-28 TTM, ROE about 8%, ROCE a bit lower, around 7.4%, reflecting that capital intensity, I guess.
Yeah, those ratios show the scale and the ongoing investment. Debt's there, but strong cash flow helps manage it.
The analysis also mentioned the bonus issue, 1-for-1 in October 2024.
Right. Doubled the share count. Adjust the price down, theoretically boosts liquidity, often seen as a sign of management confidence, even though it affects per-share metrics like EPS.
So stepping back from the numbers, what are the big strategic themes here? What's driving the ship? Well, there are several massive transformations happening at once. The new energy transition is probably the biggest, most fundamental strategic shift. It's not just building factories. It's aiming for an entire integrated value chain, hitting that 2035 net zero target. It's a massive bet.
And alongside that, the digital push continues relentlessly. Finishing 5G, getting users onto it, expanding broadband.
And adding things like the Starlink potential, aiming for total connectivity.
Then retail. Just keep growing. Everywhere.
Pretty much. Physical stores, online, new categories like FMCG, bringing in global brands. Quick commerce is a big focus through speed and convenience.
And media. Consolidation for dominance.
Exactly. The GeoStar merger creates a powerhouse, leveraging content and especially sports across TV and streaming, aiming to lead across all screens in India.
And the bonus issue fits in as a financial strategy piece.
Yeah, adjusting capital structure, signaling confidence.
Okay, so how were analysts viewing all this back in May 2025, and what were the stock charts showing?
The analysis points to the clear management vision, Mukesh Ambani and the next generation, focusing hard on consumer, digital, and new energy. Analyst sentiment seemed generally positive. Price targets like 1566 to 1585 were mentioned in the sources, but with the caveat that valuing such a complex, evolving beast is, well, difficult.
Makes sense. The SWOT summary in the sources kind of captures it, right? Strengths, diversification, market lead, finance, weaknesses, O2C reliance, debt, complexity, opportunities, India, new energy, 5G threats, competition, regulation, volatility.
That sums it up well.
And the technical picture for the stock itself, NSE Reliance, in late May 2025. trading around 14.17, 14.18, with some recent wobbles noted.
Yeah, so what do the charts say? Longer term, things look pretty bullish according to the analysis. Monthly chart showing higher highs, higher lows. Medium-term moving averages mostly positive.
But short term, more mixed.
Exactly. Short-term MAs, indicators like MACD, they were showing some selling pressure, or maybe just neutrality, suggesting a pause or consolidation. The analysis specifically highlighted key levels to watch: support around 13.97 euro 1400, and resistance up around 1455 to 1460.
So the technical takeaway then was short-term sideways or consolidation likely, navigating those key levels, but the longer-term uptrend was still technically intact.
That seems to be the gist of the technical view from the sources at that specific point in time. A moment of balancing forces, perhaps?
Okay, let's bring it all together. Businesses, financial strategy, analysis, technicals. What's the synthesized outlook from this May 2025 analysis?
The overall synthesized outlook was described as cautiously optimistic.
Cautiously optimistic. Okay, unpack that. Optimism from.
The optimism comes from the clear power and growth trajectory of geo and retail. They're becoming the dominant engines. And new energy, while early, is a huge potential long-term upside.
And the caution.
The caution comes from balancing that against the volatility in the traditional O2C business, the sheer scale of investment needed across the board, and the execution risk. Trying to pioneer new energy while expanding everything else.
Yeah.
It's incredibly ambitious and complex.
Yeah, you can see both sides clearly. So for someone following RIL based on this analysis, what should you be watching?
Key things to monitor. On the charts, those levels mentioned. 397 euro 1400 support, 455 euro 1400 instant resistance. How the price reacts there could give clues.
And fundamental catalysts.
Events. The analysis flags the annual general meeting, the AGM, usually OGSEP. Always key for big announcements. Expect updates on new energy timelines, geos plans, maybe tariffs, Starlink details, retail progress, capital allocation.
And quarterly results, obviously.
Absolutely. Q1 FY26 results, likely July-August. Need to scrutinize O2C margins again, check Geo subscriber ads and ARPU, see if retail's momentum continues, and crucially, any concrete numbers on new energy progress and CapEx spend. Plus, any news on Starlink approvals and how the integrated GeoStar media business is performing.
Right. The analysis laid out some scenarios based on these, which helps frame possibilities, but it's information, not advice.
Exactly. It helps you structure your thinking around the key data points.
So, wrapping up, Reliance isn't just one company. It's this complex ecosystem, multiple powerful engines driving forward. The sources clearly show this strategic pivot towards the consumer, towards digital, towards green energy. That's exciting. But they also really highlight the challenges. Managing this scale, the huge cost of constant innovation and expansion, dealing with global market swings.
It really is a story of transformation, balancing a huge legacy business with massive bets on the future.
And here's the thought that really sticks with me. Can one company actually pull off such enormous simultaneous transformations across energy, retail, digital, and media, all while aiming for net carbon zero? It's an almost unprecedented level of ambition and complexity, which certainly makes Reliance Industries one of the most fascinating companies in the world to watch right now. Thank you for bringing us these sources for today's deep dive.